Yeah, we've been extraordinarily welcoming. We've basically set up a sort of jumble sale or a car boot sale of our companies. It absolutely contrasts with what has happened on the continent in Germany and France, and mostly around the world, that people have said, look, we want to keep our companies national. And in many cases, they limit the amount of foreign ownership to 49%. But we have done the opposite. We've said we welcome them. Please come and help yourselves, and don't worry too much about paying tax. So yeah, we've been welcoming to the point of self-destruction.
Hello and welcome to Spectator TV. I'm Michael Simmons, the Spectator's economics editor, and today I'm delighted to be joined by Angus Hanton, who co-founded the Intergenerational Foundation and wrote the book Vassal State: How America Runs Britain. So this week, for the cover of the magazine, Gus Carter has written Soul Suckers, and he argues that private equity has ruined Britain. Angus, do you think private equity has ruined Britain, or do you think it's been a positive for Britain? Where do you stand on Gus's thesis?
It's certainly damaged Britain very badly. It's made the whole corporate world far more opaque, whereas with public companies, you can see what's going on. Private equity publishes as little as it can about its financial results, but it's far deeper than that. I mean, it means that Britain has got less tax. A typical private equity takeover of a public company will slash the tax that it pays, so that limits what the government can do. It also changes the culture of corporate world. They're much more focused on profit rather than profit plus stakeholders, and it's the other sense in which it has ruined Britain is that it sucks profits out of the country, because 17 out of the top 20 private equity groups in the UK are American. So mostly the profits, instead of going to UK shareholders, are now going overseas across the Atlantic.
Gus writes that Britain, seems particularly welcoming, or you might say susceptible to private equity. Do you think there's something in our psyche or in how our regulatory systems are set up that means that private equity have seen Britain as a particular target?
Yeah, we've been extraordinarily welcoming. We've basically set up a sort of jumble sale or a car boot sale of our companies. It absolutely contrasts with what has happened on the continent in Germany and France, and mostly around the world, that people have said, look, we want to keep our companies national. And in many cases, they limit the amount of foreign ownership to 49%. But we have done the opposite. We've said we welcome them. Please come and help yourselves, and don't worry too much about paying tax. So yeah, we've been welcoming to the point of self-destruction.
But don't we need to welcome these people? I mean, if you look at, graphs of GDP growth where we're sort of going on a reasonably good trend until 2008, and then it all falls away after the financial crisis, isn't, private equity exactly the kind of money that we need to welcome if we want to get Britain growing again?
No, this isn't new money. This is more like vulture capitalism. This is money that comes in order that the owners can get the money back. So they'll typically buy something cheaply and sell it on, sometimes to British companies, sometimes to others, with a view to getting their money back. So there's a huge difference when it comes to inward investment between the sort of investment that is buying up our assets and the sort of investment that is creating new plant and factories like Nissan did in the Northeast 30 years ago. One of the things I've observed and I've got a chapter on in Vassal State, the book, is one of the things is that the ONS, the Office for National Statistics, doesn't make any distinction between inward investment that is to buy up existing profitable companies and inward investment that is to build and create new ones. And that's a terrible flaw in our national statistics.
Are you saying then that this money is not good money if we think of the long term? I mean, Gus points to the example of Thames Water. This, you would say, private equity is not money that are going to invest in the long term infrastructure projects that we need to, not just grow Britain in terms of GDP, but actually fix the crumbling state.
Very rarely. I mean, you've got these huge groups, and they're mostly trading companies, and they're mostly extracting capital. It's sort of very much extractive capitalism. So you've got KKR, Blackstone, Apollo, Carlyle, Bain, and Advent, and that each of them is a large corporation which can happily swallow up a UK company worth 2 or 3 billion, but then often get it relisted. So Trainline was bought by KKR and they relisted it here and just took a profit in the process. There are some businesses that have been grown by private equity. So Gales is a US-owned bakery chain, was principally in London and is now spreading across the country, run by Bain Capital, and they are investing. They've got a great formula, and they're investing across the country. Not everyone loves them, so there are exceptions. And Apollo has just bought a huge company, but although it's in a sector that people won't be very familiar with, pension insurance corporation, that's helping companies to basically to fix their salary commitments, and that's probably doing a good job, useful job, but it's not really putting in new capital. It's swapping one lot of capital for another. The huge problem, the biggest problem, really, is that the way that private equity works is inimical to the best interests of the British government and the British consumer. I mean, one of the ways in which they create trouble is they want to get the highest possible return that they can on their equity. And to do that, they do a lot of borrowing. That reduces the tax they pay, but it also makes many of our companies unstable. In the book, I give an example of Southern Cross, a care home company that was loaded up with debt by Blackstone. Blackstone subsequently sold it, and it operated successfully for a few years. But after one of the downturns, they started losing money and they went bust. But that was largely because they didn't own their properties anymore. They'd sold them off and were leasing them back. So the way that the private equity gears up companies makes them fundamentally unstable. So it really is a problem. And it's also a problem that none of the recent governments have addressed, and the current government seem unconcerned about, yet they should be.
You mentioned your book there, which obviously has a focus on the relationship between America and Britain. Some people have described Britain now as being America's call center because of, how cheap it is to pay for British services compared to, say, paying American wages. Isn't that something, we should lean into and take advantage of?
Well, I think it's far worse than that, really. I think, yes, we are acting as their a sort of butler of the world, but we're their vassal state in so many ways. I think the problem is we're sending all these profits, any profits these companies make, are going back to the US, but also the control of our businesses is leading to more political control. If a company wants to do something, it has to, where it needs permission from the government. If it's in a sensitive area, the government will be getting permission from the US. So we're making ourselves much more subject to US power. There are lots of examples, particularly in tech, where one of the things that the British wanted to do was to use Huawei for its, the British government looked into it and believed it was perfectly safe to use Huawei equipment in our telecoms, mobile phone networks. But the Americans said, no, you can't. And they absolutely insisted. And the British, in the end, rolled over and caved in to American demands and have committed to taking Huawei Chinese equipment out of our networks. And funnily enough, the one we're likely to replace it with is Cisco US equipment. So the Americans weren't just making an argument about privacy and security. They were making a self-serving argument that was going to help their own exporters. A similar thing has happened last week with Apple, where the British wanted to have more access to data to fight terrorism, and the American government leaned in to help Apple fend off these demands from the Home Office, and the result has been that the British are caving in and agreeing to American demands. So I think it's not so much a question of being America's call center; it's more a question of us being their vassal.
Is America the biggest vulture? I mean, we hear lots of examples, say, of Arab countries buying up Britain. For instance, the Telegraph, a big chunk of that is about to go to the UAE. Who's the kind of the biggest beneficiary of this private equity boom? Well,
funny you should mention the Telegraph, because yes, some of it is going to the UAE, but the majority is going to Redbird, which is a US company. So that will be an example of the majority going to the US. I looked at it, and I've spoken to quite a lot of people about their impressions as to has most control. And a lot of people say, oh, the Chinese own a lot of British companies. But actually, when you look at it, the American ownership is about 10 times the ownership of the Chinese here. But also the Americans are more likely to own strategic assets. I mean, the recent takeovers by American companies of four UK defence companies, including Ultra and Cobham and Meggitt, those takeovers illustrate that it's not just any companies that the Americans buy. They're much more likely to buy strategic ones, which wouldn't be made available to the Chinese. So I think it is a very much a US thing. I couldn't get the numbers for this from the UK government statisticians, but what I did find was that the Americans are very good at working out what the numbers are and publishing them. And it turns out that the numbers show very clearly, as I've kind of detailed in the book, show very clearly how dominant America is now in UK business. And so often you'll go into a retail outlet and you'll think, oh, this is a nice British company like Costa or Boots. And those are examples of companies that turn out to be US owned.
Is any of this happening in reverse? I mean, this country, used to rule the world. Are there British private equity firms that are buying up assets overseas?
Very, very few. It's mostly one-way traffic, and every now and again you find an exception, and that's kind of hailed by the Americans to show that it's a two-way process. I mean, I was told in one of the interviews I did for the book was with Philip Hammond, and he said to me, I mean, illustratively, he said, "Don't worry, Angus. There are about 1 million Americans employed by British companies and about 1 million Brits employed by American companies." But when I looked into it, he had been right some years ago, but the current figures are more like 2 million Brits employed by American companies and fewer than 1 million Americans employed by British companies. So the balance, and employment's just one way of measuring it, but it's illustrative. So the balance is shifting. And in terms of our investments overseas, British investments overseas, those have been shrinking at the same time as American investments in the UK have been growing steadily. In fact, at some points quite sharply. And they grew a lot during COVID. That was a point at which American corporations, Blackstone, for example, and some of the pharma companies made huge strides in UK markets. It turns out that half of the COVID vaccine was developed first by AstraZeneca in Oxford. It turns out that what we bought in terms the numbers of vaccines we bought more than half of our vaccines from American companies, and even during COVID they increased the price. It was a period during which the Americans made great strides, both in organic growth in the UK and in takeovers.
Let's say the government accepts your argument and the argument which Gus, I think, shares with you, that this has caused a lot of problems for Britain as a country. What could the government realistically do to change how our economy is set up?
Well, I think the first thing they need to do, and I guess every researcher would say this, but it really is true, the first thing they need to do is to measure. At the moment, there's an insouciance about the way that the British government approach this problem. They say, oh, don't worry, it doesn't matter. Well, they don't know whether it matters or not unless they measure. They need to have a proper record of the takeovers. And I mean, I wanted to get some of these numbers from the British government. And at one stage, I phoned the ONS in Newport, and they said, we've got the numbers, but we've got them through a US supplier. We need to do our own measuring. We should know when companies are taken over and how much business is going to the US in the way that the US knows about us. But secondly, we've got to stop the takeovers. We've got to say we want British companies to be owned in Britain. And that sounds protectionist, but it's what the Americans do. Thirdly, I think we need a buy British policy, not at all costs. We don't want to give monopolists, for example, in the UK monopolists, an opportunity to profit at the expense of the British government. But we should have a preference for buying local. It's exactly what the Americans do, definitely what the Europeans do, French, Germans, Italians, Spanish. If there's a choice from their governments between buying locally or buying American, they'll buy locally. So we should do that. And thirdly, fourthly, final thing, I think we need to we are 20 miles away from Europe. We're 2,000 miles away from New York. Whatever one thinks of the Brexit and rejoin discussions. I think what we need to do is have closer trading relations with our near neighbours while retaining friendly trading relations with our far neighbours. And Trump has perhaps reminded us all that you can't fully rely on allies just because they've had a historical loyalty to the UK.
Isn't it exactly the wrong time to make these changes, though? I mean, just yesterday you've had Goldman Sachs warn that the City of London sort of is at risk of losing its status as a financial world leader because there's capital flight, there's people don't want to be here anymore. If we turn negative on PE and PE firms, couldn't this, backfire and actually make things worse?
No, I think this is exactly it's the private equity wave that has done so much damage to the London Stock Exchange. So many companies that were listed have been taken over. It's exactly what we need in order to retain the companies we've got. I mean, if we do nothing about it, companies like BP, which is under threat from Elliott, a US activist investor, companies like BP will typically be bought up by American shareholders. I mean, there is a point though about our capitalism that you're inclined to think that London Stock Exchange quoted companies are British owned, and that was certainly true 30 years ago. But now the average quoted company is 30% owned by American investors anyway. So there is a sort of takeover going on of whole companies and of the shareholder register. But no, I think it's definitely the right time to protect our companies, and it won't lead to a flight of capital. And if anything, it will make London a more attractive place to invest.
Angus, thanks very much for joining Spectator TV.
Thank you.